Guys, welcome back to another episode of Lions Den Investments and Reviews. In today's video, I wanted to just briefly touch on U.S. regulators and stablecoin hype, and what is the hype behind that, and the stablecoins, and also how important are smart contracts on the blockchain. Okay, the reason why I'm getting into this is because, like you've heard me say before in some of my videos, we are basically in a bull run right now, and we're in the beginning stages of it. Okay, if you haven't watched any of my previous videos, go ahead and click the subscribe button, or if you're tuning in for another video, go back and watch some of the other videos. I explain how we're in like inning probably 2 or 3 of this bull run, and it's inning 2 or 3 of like a 9 or 10 inning game. All right. Now, I'm going to play you a video here a little bit later from a digital asset manager who basically, goes against what I'm saying and says that we're in like inning 1 of this 9 or 10 inning game. So I'm a little bit ahead of the curve here when it comes to shooting these videos and talking about, where we are in the bull run. I think, again, we've got a lot higher to go with the prices of Bitcoin and some of these altcoins and the market as a whole. But getting back to what I was talking about with U.S. regulators and all this stablecoin hype that you're hearing regarding like the lawsuit case with Tether and Ripple, if you want to know why there's so much hype behind all this, let's look into smart contracts first. And you might be asking yourself, if you're watching this for the first time, what the heck is a smart contract, right? Um, well, according to the Blockchain Council, which is one of the international standards for teaching blockchain technology, what they say about smart contracts and use case for business here, we'll just start with banking and financial services. All right, so you can better understand what a smart contract is, because it's important to understand what a smart contract is, and once you understand that, you're going to understand why there's so much hype behind these stable coins and U.S. regulations for like the big institutional money coming into the space. Okay, because smart contracts they play a very, very key and vital role in this implementation and rollout of this new digital economy that we're going into. So, banking and financial services, again, we'll just start there because the rest of these are literally geared towards like the corporate side and corporations. So, banking and financial services, smart contracts can be used in areas such as mortgages, national bonds, payments and settlements, and insurance claims. Okay, it's pretty straightforward. Now, why is that important? Because basically, what a smart contract does, you guys, if you don't already know, for anybody who might be a programmer or developer watching this, it is the code that is implemented and deployed on, say, like the Ethereum blockchain. Okay, and what it does is it allows people to pay for services, and when they pay, say through a token, and they send that money over to a contract address, that token then executes a function in the background. Okay, and this function can be in JavaScript or Python, some programming language, right, that runs on the Ethereum blockchain. And what it does is it executes a function and automates an action, so that you can have a legal binding contract between company A and company B, which is fully automated, and it takes the third parties completely out of the equation. So, for example, like with real estate, right? So you got when you go to sign a mortgage, you have all these documents you have to sign. Well, it completely gets rid of that third party that facilitates that transaction, because now you have digital signatures which are attached through your private key. And when you trigger this function inside the blockchain, okay, via smart contract, you're paying a token over to that contract address, and it's coming through your private key. So your private key is your signature, and all documents therefore when they're released on the blockchain and pulled from the ledger through a DApp, which is a decentralized application, or via a website, there's no need for you to sign any of this because it's already been signed through your digital signature. So moving forward, that creates a lot of demand for innovation, and for these big institutional investors to get on board with it, because it automates a lot of what corporate America used to do when it comes to pushing paper. Okay, so that's, in a nutshell, that's what smart contracts do. And that's what's creating all the hype behind these stable coins, because you got stable coins like Tether and USDC, which are both ERC20 tokens. And being that they're ERC20 tokens, you can write smart contracts to addresses, okay, and use those tokens to execute a function to automate some type of a legal agreement between company A and company B. It's revolutionary, groundbreaking technology that is going to move us forward and make our lives much more efficient. And because of that, again, you're seeing stuff like this where JP Morgan Chase executives are weighing in on stablecoin regulation for crypto competition. All right. While the OCC's new stablecoin guidance doesn't have an impact on JPM coin, it could lead to crypto payments if there's demand. Well, obviously there is demand because JP Morgan is creating their own coin. All right. I'm not going to get too much into this article just for the sake of time, so that you're not getting bored with me just reading an article for you. So I'll leave a link in the description for you if you want to read over that. But I just want to show you that there are some very, very big players that are coming into the space right now and are willing to put money forward to invest in these projects. And a lot of that has to do with this key technology called smart contracts, which is implemented on the blockchain. So it's not just from a monetary perspective, but it comes, it plays into legal agreements and business operations as a whole. Another one here, this is from Reuters. U.S. regulators approval of stablecoin payments provides regulatory building block compliance challenge. Basically, a new interpretive letter from the Office of the Comptroller of Currency allowing the use of stablecoin cryptocurrency for bank payments opens a pathway for mainstream finance to live test digital assets in a relatively safe corner of the market. Okay, so you can do it on a test environment first and then go live. And that's what they're doing right now, is they're getting ready to go live. The decision greenlights what some see as training wheels, enabling the creation of compliance controls for more expansive use of digital currencies in the future. So again, what these guys are doing right now is they're realizing that the technology is there to move us forward, to automate the entire corporate America structure from a global scale. This is not just in the U.S., but for all countries abroad. You got tokens out there that do cross-border payments, and you can implement smart contracts along with that. So, if you're seeing the bigger picture here, we're just getting started. And that brings me to the video here that I want to play for you. And this is from Mike Novogratz. Let me see if I'm pronouncing his name right here. Novogratz. Mike Novogratz. Okay, he's from he's a digital asset manager for Galaxy Digital. And just pay attention to what he says here, okay? Because he's basically the one telling everybody that we're just getting started, and he kind of goes against what I was saying, which was that we're in inning 2 or 3 of this bull run, okay? So listen to what he has to say here.
At this point, and I want to welcome back to the show Mike Novogratz. He's founder and CEO of Galaxy Digital, which has made a big bet on Bitcoin. So Mike, I guess you're sitting pretty this morning, as you have been. As we look at what's happened with Bitcoin, and there's always cautions, right, when you invest in Bitcoin about volatility, about potential pullbacks, about potential corrections. It hasn't happened this time. And since Bitcoin has sort of a lack of correlation with most other assets, how do you figure out what might trigger that sort of correction? How do you prepare for it and defend against it?
Yeah, like that's a $64,000 question. I got a couple calls when it was at 41,000 from guys I invested with literally 6, 7 years ago, and they're like, I've been really good at buying it, but I haven't been good at selling it. Is it time to sell? It's interesting. We certainly went parabolic. We had all the markings of a speculative frenzy, right? Volatility spiked to 130, 140%. We had lots of call buying, retail leverage way up, hard to get cash in the system. And so that usually is the mark of a correction. We had a pretty big correction, right, from 41 to 30. What's been interesting is there was a wall of money down buying it at 31.
Okay, you mentioned wall of money buying down at 31, right? 31,000. I kept saying in previous videos that if you saw a correction in Bitcoin and Bitcoin corrected down, which we did, we would drop, say, like 25, 30%, maybe even 40%. But then you would have buyers coming in, and those buyers were going to be big institutional money, which would be propping the markets up, giving us a stable floor as far as the support on Bitcoin. Okay, so for those doubters out there who think this bull run is over, again, it's just getting started because you got big institutional money. I'm talking guys with like hundreds of millions of dollars coming in, asset managers from all these big banks who are going to be buying up Bitcoin when it comes crashing down like that, and it puts a floor underneath the asset and gives it a new support level. All right, so that we can continue heading higher. So Bitcoin is going higher. I've always said that, and this guy here, Mike Novogratz, is just confirming that for you.
And what I would tell you is the institutions who are coming into this space
Yep.
now, that weren't in the space 6 months ago, that weren't in the space a year ago, don't have their fill yet. Not even close.
Huh.
We're in the first inning of a 9 inning game with insurance companies.
There you go. First inning in a 9 inning game. I was saying we were in inning 2 or 3, but according to this guy, I'm a little bit ahead of the curve, and that's what I was, referring to earlier in the video here. So let's go ahead and listen a little bit more here, and then we'll cut this interview.
With asset managers, with the wealth channel. And so I think dips will be bought. It doesn't mean it's going to explode right to 50,000 right away, right? There's still a lot of, price to churn, right? If you bought it at 15,000, you made a whole lot of money. You might want to sell it and buy a car. You might want to sell it and buy a house, depending on how much you bought. And so there always are sellers in markets. But what we're seeing is a transition from retail leverage players into much deeper pockets, much longer holding hands institutions. If you're an insurance company and you buy Bitcoin, you're not buying it for 2 months. You're buying it as a long duration asset with a 4 or 5 year horizon.
All right, so he talks about 4 or 5 year horizon, right? So if you're somebody who's questioning whether or not the Bitcoin bull run is going to last much longer, you can go over to my website, academyofcrypto.com. I have what they call the stock flow model. And you can take a look at that. That kind of measures where we're at right now. As far as Bitcoin hitting a peak in the market, I would say we're not even close. Some of the analysts out there on Wall Street have projected to hit like 115,000 on up to like 146,000. Could go higher than that. But I realistically, just based on what he's saying and what I know about the markets, the Bitcoin bull run should continue on into and probably peak sometime around like late September, October. It could even run into like November, December of 2021. Okay, if you want to know more about the stock to flow model, again, go out to my website, academyofcrypto.com. I have it up there for you. You can just click on the image. It takes you over to a live chart where you can actually see where we are when it comes to supply and demand. But I pay attention in these bull runs to more of the fundamentals and the technology, the underlying asset, and what the use case is, and what they're trying to do with it. Okay, because if you understand that, then you understand the cash flow and the money velocity in these global markets, and you can get a good idea, a good picture as to how much money is actually coming into this market. But I'll leave a link for this video as well. Again, guys, when we're going through this bull run, you're going to see ups and downs, okay? Like I've always said, you'll hit a peak and then you'll come crashing down, and you'll get a retracement. Bitcoin or whatever token it is you're following, as far as technical analysis is concerned, will find a new bottom, and then it'll head higher. Okay, so don't panic when you see or read articles out there, about how Bitcoin is a crappy investment, or we've hit the peak and from here it's only downwards movement. Don't pay attention to that. Okay, you got to understand the markets, and that's what I'm trying to help you guys do here is just understand these markets and how they work, because this is where all the money and the smart money is going in markets. If it was going somewhere else, I would pay attention to, say, stocks, or traditional markets, but it's not going there. It's moving into this because we are transitioning into a digital economy, and it's pretty obvious now. So, with that said, guys, remember, fear nothing. You're going to get some dips when there's blood on the streets. Remember to be greedy, and when people are fearful, be greedy, and when people are greedy, be fearful. And right now, I would say, for me, I'm greedy. Okay, if you're greedy, hit that like button, um, and if you're new to the channel, go ahead and subscribe. And remember, guys, fear nothing, my friends. Until next time, I will talk to you later.